Hey guys, this is Rudy coming at you live from Palm Beach in Florida. I have been taking a bit of a break. If you've watched one of the previous videos, you would have known that I've been away for a while. I'm also training for a half marathon. I'm running on this coming Sunday, which is December the 11th. And running a few hours every day takes a big chunk of time. And been a bit busy doing other stuff, but you guys gave me homework to do as usual. And when I make a commitment saying I will get back to you and answer some of your questions, I will try to do that. And of course, in the meantime, I'm also trying to keep up on news, right? And there's a lot of stuff going on in the marketplace. And frequently, you've heard me say before, especially when the market starts crashing, one Maserati, two Maseratis, whatever. In this particular case, there's a lot of stuff going on, but don't be too distracted by all the moving parts. One of the challenges that we have is that the traders are currently calling the futures price for WTI for January at $74. Now, remember, most of the time we don't even know what the weather is going to bring for us tomorrow. So when you see the futures for January trading at $74 for WTI, you got to know that the traders are just making merry. And I've also said before in other videos that sometimes we think that the largest energy companies on the planet include companies like Saudi Aramco or Exxon or whatever the case might be. But sometimes the largest oil companies on the planet are Goldman Sachs, Morgan Stanley. So the traders will trade, right? So what you need to do is do your due diligence, do your fundamental analysis, decide if you're going to buy long and stay long, and what your timeline is. If you generally view some of the positions that you enter as 3 to 5 years or whatever the case might be, as a general rule, you'll be okay. Even if it's not at the end of 3 or 5 years, during the time, you're going to be okay, which means you can take some profit along the way. Let's look at these news headlines, right? So it doesn't matter what date this is. That's not important. That's not the point I want to make. The point I want to make is this. On the same day, I took a couple of snapshots of some news. The one said, oil prices fall more than $2 on Russian oil price cap talks. And the very next headline from Barron's, the first one is Reuters, oil moves higher as Western nations set to agree on Russian price cap. So both of them use the Russian oil price cap talks as a reference point or benchmark. And then Reuters is saying oil falls more than $2, and the other one says oil moves higher. So most of the mainstream media, which is actually just state-funded propaganda, is just garbage. So most of the time you can just ignore some of these things. How about this one? So the Brazilian report, 5 years explaining Brazil. Of course, this goes back a little bit. So here I'm looking at Bolsonaro to swap Petrobras CEO for the second time in a month. Now, this was actually just a few months ago this year, so in 2022. And then Bolsonaro's pick for Petrobras CEO gets the okay. This was on June the 24th, 2022. The last time Bolsonaro replaced the CEO of Petrobras was as recently as just a few months ago in June, when he was still president, and arguably he might still be president or not. Who knows what's happening in Brazil? How about this one? Lula's to start job interviews for Petrobras overhaul. This was a few days ago, so it says 2 days ago, but I made this video took the screenshot a few days ago, so it's probably 5-6 days old. Petrobras stock sinks below $10. Man, that was a buying opportunity. That was arguably a screaming buy. When Petrobras dropped below $10, if you were long Petrobras, I hope you added to your position. If not, you probably missed an opportunity. But hey, these things happen, and that's why we keep a little bit of cash on hand, because cash is arguably worth nothing. But if you don't have cash, then you can't take advantage of an opportunity when a stock dips like this one did. And then what happened was, just in terms of my homework, Lenko Bear said, I'd like to hear your thoughts on energy service companies. I eliminated one of them, 9 Energy, Transocean, Noble, Diamond Offshore, and Valaris. I had never heard of Valaris before. So I had to quickly look to see where this one came from. And then I found out that Ensco and Rowan had actually merged to form Valaris. And this was already in 2019. So because I don't spend too much time looking at some of the companies, the drillers in this particular example, I completely missed the 2 of the top 10, effectively, Ensco and Rowan, merging to form Valaris. So Valaris is a large company. So what I'm going to do is I'm going to compare the 5 companies that I have here: Nine Energy, Valaris, Noble Corporation, Diamond Offshore Drilling, and Transocean for you in this particular video, based on the fact that Lanco Bear had given me this homework to do. And as you know by now, I read your comments. And when I have homework to do, I usually get around to it, even if it takes me a little bit of time. So sorry, Lanco Bear, for taking so long, but here's your kind of snapshot overview of these 5 companies. The 5 that I selected here, I also selected because all 5 of them trade on the New York Stock Exchange. And as you can see at the bottom of the screen, oil, field services, oil, gas, and drilling, oil, gas, drilling, oil and gas, drilling, oil and gas, drilling. These companies are pretty much the same to the largest extent, with Nine Energy being only slightly different to the other 4, that's oil and gas drilling. So what we're going to do is take a look at these, and we know now, if we look at the 20-day raw stochastic, according to bar charts, that if you have a percentage above 80, it's overbought. So maybe right now we don't want to open a new position in Nine Energy, whereas the other 4 of them actually look sort of okay, all about the same, sort of in the mid-50s or thereabout. Couple of anomalies here. So weighted alpha on Nine Energy is also 276, and the others are sort of obviously much lower. But look at the sentiment here. So a month ago and today, 100% of people say buy, so analysts, whereas it's dipped a little here. But look at this anomaly over here. A month ago, only 24% of the analysts said buy Transocean, and now more than half of them say buy Transocean. 2 ways to view this, right? Analyst. If the sentiment is improved by almost 100% from 24 to 56%, then you might say it's time for me to take profit and get out. And on the other hand, if you have a company like Valaris, where they're saying, 2 months ago, 100% of the analysts said you should buy it. Now, a few of them have dropped off and said don't buy it anymore. Maybe that's one you should look a little bit more closer at. How about the performance? So here I'm just looking at over the last 6 months. If you've been invested in Nine Energy, in fact, over the last year or so, you've more than doubled your money. So you are smiling all the way to the bank. If you were holding any of the other 4, maybe Diamond Offshore, you might have felt a little bit okay, but the rest of them are just flat. So they've gone nowhere at all. There's nothing here, right? So 5%, 0.85. So I think Diamond Offshore is okay at 21. But look at this, Nine Energy over 200% just in the last 6 months. If you are long Nine Energy, congratulations. You made a whole lot of money. Hope you've taken some profit, because remember, nobody gets poor when they take a little bit of profit. How about looking at the key statistics for these companies? So what we have here is annual sales, right? 349 million, and the market cap's only 348 million. So Nine is actually producing as much revenue as what its current market cap is, which gives you an indication that it might still be undervalued, even though arguably some of the technicals are not in its favor, like the 20-day raw stochastic score. Annual net income for Valaris, negative 4.5 billion. Market cap, almost 5 billion. This doesn't look too good. And how about the PE ratio down at the bottom, 64? Currently, the S&P 500 has an average PE ratio of around 14.2, or thereabouts. So if it's below 14, it's attractive. If it's above 14, it's not. So based on the price earnings ratio alone, both Valaris and Noble Corporation are eliminated with a PE of 64 and 83 respectively. The other guys are not making a profit, so this looks horrible. Negative $2 billion annual income, market cap less than $1 billion. Hey, Bear Lanco, I'm not sure I want to buy any of these, so they don't look so hot to me at all. How about over the past year to date? How have we done? So like I said, if you were invested in Nine Energy, man, you had a good year. On the other hand, if you were invested in any of the other 4, you haven't done too badly. I mean, the worst performer here, look at this Diamond, 30%. So any of these have rewarded you handsomely, but Nine Energy, damn, that's a great outlier. I'm not sure if you are going to get a continuation on that. So for that reason alone, I'd be a little bit hesitant and cautious now. For sure, I would take profit. And what I've done many, many times before, especially on a smaller cap stock, if you are fortunate enough to get a 2-3x return on your purchase price, whatever your opening bid was when you entered a new position in the stock. If you've got a 2 or 3x, take all your money off the table and let the rest just run, right? That way your risk is 100% mitigated because you can't lose any money. You've taken all your cash back. You can always buy something else again, right? And let the rest just run. Don't just let it sit there, because when it pulls back, man, that's a horrible feeling. Let's take a look here quickly at the snapshot. So 9 Energy, you can buy it. Now, once again, this is a few days old because I've done this. I did this while I was actually sort of on my little vacation, and I wasn't making any videos, so it's already out of date, right? So I have no idea what it's trading at today because I haven't looked. But on December the 1st, so a week ago, today is December 7th, you could buy 9 Energy for $10. It's only a $342 million company, so it's relatively small cap. Trading right at its 52-week high or thereabouts. Look at the short interest down here, 11%, right? So a lot of people are betting against 9 Energy, saying it's probably going to pull back from here. So these are the things that you may want to pay attention to. If you're long in 9 Energy and you are up, 800%, damn, man, take some profit. Nobody gets hurt when they take a little bit of profit. How about Valaris? So you can buy Valaris, or Valaris, however you say it, for $65. It's a $5 billion company. It's got a P/E ratio of 28. It's too rich for me. I don't want it. It's trading at its 52-week high. It's too high. I don't want it. It's held by institutions, 86%. It's only got 4% short against it, 86% institutional holding, also arguably too high. But damn, if you were long Valaris, you have done quite well, based in Bermuda. Noble Corporation, how about this one? New York Stock Exchange, ticker symbol NE. You can buy it for $37.46. As I said, remember, these slides are a week old, so I don't know what's trading at currently, but it's probably going to be 30-something bucks there or thereabouts. Also a $5 billion company, P/E ratio of 20. So a little bit more attractively priced than in the predecessor, but still a little bit too rich, right? I want them at sort of PE 14 or below. Edging towards the 52-week high, which is 42. Same thing, 63% held by institutions. Damn, good return over the past year or so, 1 year, right? Done really, really well. How about Diamond Offshore? Well, this one you can buy for about $10. It's only a $1 billion company. It's not making a profit. It's got a 4% short interest here. It's 93% held by institutions, and it's up about 40% or so. Kind of sitting just left of the right-hand side there. So edging towards the high. Man, I don't know if I can buy any of these. It's like, can't find at the level I'm doing this snapshot, I can't find any compelling reason to buy any of these. Transocean, $4, $3 billion company, yeah, a $3 billion company with a stock price of $4. Interesting. Sitting smack bang in the middle of its 52-week range. Look at the short interest on this one, 17%. Man, volatility, off the charts. Man, if you bought Transocean up here, you're probably not feeling good. If you bought it down here, you're probably feeling okay, but I don't know if I want this thing. A lot of people ask me about rig. And I know a lot of people have made good money, especially the people who managed to sort of get in towards the bottom and then get out towards the top. But like, it's difficult to time these things, man. So you got to be so careful. This one's based in Switzerland. So I'm not sure where these are going. It's like there are 5 of them. Buy, sell, or hold. For me personally, I wouldn't even go anywhere near them with your money. But that's because, I don't tend to like to gamble. If I were long on any of the 5 of them, I probably would have taken some profit along the way already. If you haven't yet, you could probably do so now and, add to a little bit of your cash awaiting investment and wait for the next stock that, tanks that you can pull the trigger on that has good fundamentals. If you're long in these and you hold them, hey, good luck to you. What I would do if I were long in any of these is I would definitely take some profit and then maybe hold some just to try and mitigate my risk. So there's my response to the question, Berlanko. The drillers. I know a lot of you are invested in some of these drillers. I mean, rig comes up in our conversations on our YouTube channel all the time. And a lot of people have made good money on rig, and I'm happy for you. But if you made a lot of money on rig and you're still long on rig and you haven't taken profit yet, maybe take some profit and then just let the rest of it run. I don't know, man. Guys, like this particular one, none of these 5 make me like trigger happy to open a new position. I don't own any of them, and I probably wouldn't. So that's just me. You can tell me differently in the comments. I look forward to chatting with you. Bye bye.